Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01 in the a.m. Eastern Standard Time. What we're going to talk about this morning, pre-market futures activity. We're going to talk about economic data, not that there's much. And we're going to talk about some stock chart requests put forward by our members. And first, let's talk about our friends over at Trent Spider. Folks, don't settle for ordinary trading software. Use automated technical analysis algorithms to help identify and speed up your analysis and improve your accuracy at the same time. Reduce costly analytical mistakes and find winning chart setups and time your trades with precision using their trade alerts. I use them all the time. As a matter of fact, I had a whole bunch fire off yesterday, and I have to go back and review them all. Find winning chart setups with their scanners. Explore the product. There's a link below, 35% discount code below. 7-day free trial offer. Take a demo tour, visit their site, and they have TrendSpider University where you're never left alone. If you have a question and they can't answer it here, they have a great support team to help you out. So again, take advantage, 35% discount code, lowest price on the web, 7-day free trial offer. Let's get to the economic data. So this morning, we have consumer confidence coming out. And we also have the Case-Shiller National Home Price Index. Now, Shiller came out yesterday, and he said that in real terms, I guess adjusted for inflation, that home prices are at all-time highs. I'll take his word for that. I've seen the chart of the prior peak during around 2006, versus the average home price of late. Maybe it's a different chart, but it looks about on par with where we are versus 2006. So you have to adjust for inflation, and I guess in real terms, it's what he's doing, but I like to see the statistics that he's using. And if I have time tomorrow, I'll dig that up. Hopefully there's a chart there and an explanation of where he's at with his thought process, and we'll go over that tomorrow morning. Let's go to the pre-market futures action. Now, yesterday, this is the S&P 500. Yesterday, we saw a gap up high. Remember, last Thursday, we had a bullish reversal bar. Very strong day. Friday, we faded. Yesterday, we gapped up above Friday's fade, and Friday was a pretty bearish day. The key is to remember this, is that volume yesterday was absolutely horrific. Very, very low across the board. Small caps, mid caps, large caps, Qs, whatever you looked at, it was low. Very, very low. What does that imply? A potential that yesterday was purely a short covering rally due to one of two things. One, the Federal Reserve's putting forward that Saturday sneaky release about how to expect lower jobs data, lower GDP. And you'd be saying, why wouldn't the stock market drop on that? Well, initially it did on Sunday night, then it reversed. Why? It's because what the Federal Reserve did in a passive-aggressive manner was say, okay, you know what? Don't worry about inflation. We're going to stay on the sidelines. Don't worry about rising interest rates and rising inflation. We're not going to do anything. We're not going to fight inflation. And then on Monday, to douse out the inflation worries, you had the China Impulse Credit Report come out. And basically, it slammed commodities. And we got stopped out of half of one of our commodity trades yesterday, which is cow-made foods. I made a mistake there, and I paid for that mistake yesterday by stopping out and quarterizing the mistake I opened up last week by buying before the breakout. I broke one of my own rules. And we resolved that yesterday. So let's take a look at the futures action. Are we getting follow through to yesterday? It's all about follow through. Overnight, yeah, we have a new daily high versus yesterday. The question is, do we hold it? Do we close at session highs, or do we fade on the day? We've been seeing that all too often of late. The S&Ps are up just shy of a third of a percentage point. Again, they were higher. up as high as 42.1275 on the E-minis. The NASDAQ 100 up a half percentage point. Now, what's concerning here, and I have a short position on the NASDAQ 100, which I may need to manage. And the concern is this. We broke out overnight. This is a 15-minute chart. Let's pull back to a 4-hour chart. Yeah. We broke out overnight. Now we're doing a retest, which is not good for my short. Now, what kind of a short do we have? We sold deep out of the money naked calls on the TQQQ. And that will have to have us managing that trade, possibly getting long, making that a covered call. But we'll see how we close out the day. We're not going to react early on. We're going to wait until the close. The Dow up about a quarter percentage point. Nice W formation here. And what we did was that we broke out above this pivot point. So here's your W formation. Here's your pivot point. Here's the right side of that W building. And we are now above that pivot point. Pretty bullish for the Dow. The Russell 2000 up just shy of a third of a percentage point. We remain in this multi-month consolidation, which began back here in late January. Yes, we've broken out, but we failed. And we've just been dormant. Larry, short-term XLK may go higher. Rising lows on balance volume, weekly chart, weekly RSI moving higher. Yeah, CRWD I want to take a look at in a minute. Yeah, I wouldn't want to rely quite yet, unless you're talking about a rising weekly RSI week over week. If we're talking about, and I'm saying like 3 weeks or 4 weeks of rising RSI, I don't want to use weekly RSIs quite yet this week. It's a little bit too early. We have a long way to go. Maybe starting on Wednesday afternoon, start looking at the weekly RSI. But we'll take a look at CRWD and XLK. Okay. What else do we have? Let's take a look at, let's go to the dollar. The dollar is now firmly entrenched down below 90. They tried to rally it. We knew it was not going to hold. And here is, you could argue up here, but I want to use this 90 mark. It's a psychological resistance level. RL, good morning. And we have broken down to new lower lows. This is very, very bad. Good for gold. Very, very bad. So we're not poised to close out this month very strong at all. I mean, this is very poor. So what does that mean for gold? It's down. Shockingly, it's down. So it looks like what we have going on here is a risk-on environment. Even with the dollar down, people would rather buy high beta tech. We're going to go over Tesla in a moment, and Apple, and Boeing as well. So surprisingly, no follow-through here on gold. Let's check out silver. Silver honestly looks better than gold does. This is very nice. We're at the apex of a wedge formation on a 4-hour time frame. So silver looking very good. Let's bring up oil. They had to spike oil yesterday, and they did it. That kept the S&P 500 up. Light sweet. Light sweet is down today. There's over a 90% correlation with the energy stocks and oil. Watch energy today, because it's going to act as a headwind for the S&P 500, unless, of course, the Tues really step up to the plate and knock the cover off the ball, negating the weakness on energy and driving up the S&P 500. Checking with lumber prices. Lower highs, lower lows, and a gap down on lumber. Commodities have never really recovered, except for precious metals. They've never really recovered from that CPI report, the Sell the News report, a couple of weeks ago. Natural gas, weak this morning. We were above a 3 handle not too long ago. We have a position here. Weekly chart. We broke support. All right, we're certainly not going to add to it. Checking with ag. Ag is getting hammered. Soybeans up. Beginning to consolidate, but a potential head and shoulders setup. Actually, we've already had a head and shoulders setup. We may be setting up for second tier head and shoulders setup. Here's your head, left shoulder, right shoulder, the neckline, which we broke. Now here is a secondary neckline. That we're trying to hold on to. I think we're in the early innings of this this commodity bull run. Let's go to wheat. Wheat getting hammered. I'll tell you, when this commodity sell-off is over, this correction, and you see agriculture prices moving up higher yet again, it's probably going to be a very ruthless breakout. And the narrative that they put forth yesterday about how China has crushed commodity prices is going to go by way of the dodo bird. Platinum is broken down. Shockingly weak price action here. And palladium is broken down. So it looks like what we're going to get, or what we are getting, it started last Thursday, is a rotation into tech. The big 800-pound gorilla in the room for technology is none other than bond prices. And bond prices, this makes sense. Bond prices are moving up. Therefore, yields are moving down. That'll help put a bid under tech stocks. So, with that being a known, Let's take a look at Tesla pre-market, probably up. It is. Let's go to the closing price action of yesterday. So this is where we need to start thinking about, in the short term anyway, hedging our shorts. So on a weekly time frame, and again, I don't like using weekly charts this early in the week, but we are at resistance. We broke out above one resistance level yesterday at 596.10, but we were stalled out yesterday at resistance at 606, and we closed just shy of that. I'm not going to use a weekly chart for this alert. I'm going to use a daily chart. Daily chart. I don't want any sensitivity. Good volume yesterday on Tesla. They're probably going to pump this up higher. I don't see any compelling reason to go chasing this stock. You might get some backing and filling. A lot of technical damage has been done here. But we might rally up to, here's the value of the automated trend lines to know exactly where you may want to get out. Watch that line in red right here at 652 per share on Tesla. So little downside risk, lots of upside potential here. Boeing. Boeing went over this weekend, or this past weekend, as a potential long weekly time frame. So far this week, we have a new weekly high after flashing a bullish reversal bar last week. Good stuff. Daily chart. Daily chart yesterday. We pulled back, came very close to triggering our alert. No cigar. It reversed off of, again, the value of the automated trend line, man. This is where I should have had an alert set up. This breakout point here. We had broken out on Friday, retested it yesterday, and then reversed off of it. So in addition to these two alerts, I should have had one set up here. You never know. Maybe if we retest yet again. And we'll keep this active for 10 days. Again, folks, we're coming out of a downtrend. You got to expect backing and filling, a little bit of volatility before momentum really gains traction. People have been burned here. So they're going to be skeptical of any rally. But that skepticism, assuming that we gain some traction and hold support levels, that's our opportunity to enter trades. Apple. Now, Apple of late has been a bit sloppy. I'm going to come back to this daily chart in a moment. Weekly chart. We have an alert. Oh, that fired off last week. We got to change this. We have an alert down below. We're in a wedge formation. Here's your upper band of resistance in red, lower band now in purplish red. Daily chart. Now you can see last week, Wednesday, Thursday, nice up days off of that retest of weekly support. Friday, a fade. Yesterday, a gap up. But we still couldn't close above the 50-period moving average, nor the 21-period exponential moving average. So Apple is still a bit sloppy, trying to find its footing, but it's building a base. Long story short, it's building a base. So with yields moving up, with bonds moving up higher, yields pulling back, that's going to give these tech stocks some room to run to the upside. CRWD. This is another one of our watch stocks from over the weekend. Let's see what it's doing thus far this week. We have an alert set down here for a weekly retest. We didn't get that. We got a gap up higher. We have a new weekly high on CrowdStrike. And what was support back here in February appears to be support. It was support back here in April as well. But it's been porous. It appears to be support yet again this week. Daily chart. Really good price action. Set up an alert here to see if we consolidate and retest yet again. We get a couple of bounces off of the support level. That would be interesting as a potential long entry with a tight stop right below. And then what I'd want to do is add more on a breakout above this resistance level here. I don't want any sensitivity. We just care that it closes above that resistance level. And we'll keep this active for a few weeks. All right, so it's hard to see here, but our alert is set to the upside as well as to the downside on CrowdStrike. Larry, did I answer your question? Weekly RSI moving higher. Crowd looks like a buy right here. Yeah, I would agree with you. But I would just use a stop right below yesterday's lows. If we close down below this support level here at around, what is this number? 210.78. Give or take a dime. Not exact. XLK. Ooh, yeah. So we have a weekly breakout here. And as to the RSI, weekly RSI moving higher. Yes. And it has been moving higher. This is the third sequential rising high on RSI, assuming that we close up. So RSI is looking good, Larry. I agree. Daily chart. Now the caveat with technology as well as the cues, we need to see follow through. We need to see rising volume here because yesterday's volume was absolutely horrible. Really horrible. But we did manage to follow through. This 138 mark, 138.50 should act as support today. Perhaps get a retest there. I'm not going to sit and learn. I'm probably not going to trade XLK, but that would be a good retest of support, and we could have a rally up into 144.32 on the XLK. That would be the next resistance level. And if you want to talk about RSI here, I really like the rising RSI. So in terms of shorts, we're going to have to take some action on the Trip Q short, manage that a little bit. But I'm not entirely convinced that the rising yields is over by any stretch of the imagination. Has it paused? Yeah. But once we start resuming the uptrend on yields, you're going to see these names come back under pressure. So I'm viewing technology right now as a short-term swing trade only. RL, we'll do GOLG, Google, Alphabet. Big move yesterday. The monthly chart looks really rock solid. We're poised to flash a bullish key reversal bar on Google. But if they fail, we have a couple of days. Today's the 25th, right? So we have a few trading days left to go. This is a hammer formation. If they fail to close this positive, and they close it right here, right now, where we're looking, it's not necessarily a bullish bar. They just, the way you read into this is that there simply aren't enough bulls to push this over the line to get that field goal. So, or a touchdown, I should say, field goal. But on a weekly time frame, I mean, we're looking good here. Nice breakout on a weekly time frame. Obviously, too early to talk about volume in the week. 4 trading days left to go. Daily chart, nice price action here. Keep in mind, we have resistance above right here at 24.08. Larry, XLK double top. I'm assuming on a weekly time frame. All right, for investors, gold pipelines, ENB, PBA, WB. Man, you really love the pipeline plays. Yeah, I mean, they look really good. What's the other one that I had here? I had my list. I don't know what happened to my list. Franklin gave it to us. I'm going to have to ask him for that again. My list is gone. But they have 7.75% yielder on one of the pipeline pays. All right, so with that, folks, everybody have a profitable trading day. Thanks for joining in. And I will talk to members later on this evening on Market Wrap. And till tomorrow, everybody have a great night. Be well. A great night. I just said have a great night. I'll talk to you tomorrow morning. Have a profitable trading day. Be well.